Okay, Garrett, I'm now making you the presenter. Looking forward to our conversation. So you'll see the drop-down menu that's going to give you volume with your mic.
Can you hear me now?
Got you, Garrett. Loud and clear. It's really
right.
it's really a pleasure to meet you.
It's a pleasure to be on. Thank you for having me.
Yeah, it's great to have you on today. I'm waiting to see your screen. So, like I was saying to my associate Steve, I saw a few of your tweets, and I go, "Wow, this guy's got a great eye." And
Thank you.
I know you're an Elliott wave practitioner, and I have a question because there are a lot out there. I mean, it's a very popular methodology, and I always ask Ellioticians, what separates you from other people? So if someone used GAN, it's not the method, it's who's interpreting the method. So I know you work with Avi Gilbert, and I've seen Avi's work, a great trading mind. I've seen some of his forecasts work out and be very prescient. But where I'd like to start, Garrett, is your first job in the business, or how you got and what you were doing before, and just a little bit about the journey that you had to where you are now as a market tactician, practitioner, working with a great mind like Avi Gilbert.
I actually did not have any formal schooling in finance or anything market related. I actually went to school for film studies. I got a BA and BFA in film studies, and was originally doing the post-production side of things. I was doing video editing and motion graphic design as a freelancer for companies in Denver, Colorado. And began basically trading on the side to supplement my income.
So is film still still a passion of yours? I know sometimes when we're young, we make a selection. Like I was interested in journalism, and even though I'm not, didn't pursue a career in PR or broadcast journalism, I'm able to do that with what I'm doing now by interviewing people like you. You still have passion for that industry, the film industry, or is trading really replaced it totally?
I do. I definitely do still have a passion for it, but yes, I would say that it has been somewhat overshadowed by by trading and technical analysis at this point. But there's I would say some bit of overlap, and I think that's why maybe technical analysis and Elliott wave theory and charting, etc., really spoke to me because of that aesthetic portion of it that I really enjoyed when I was doing motion graphic design and stuff like that.
Okay, all right. So let me ask you this: your first when you first started trading, how did you gravitate towards Elliott wave work, and did you experiment? Sounds like you're self-taught, or perhaps you did have mentors. Tell us about how you ended up making Elliott your model for how you're going to attack markets.
I imagine that my journey or my beginning with trading was similar to a lot of people who just start trading, and I think it was in 2011 in August, I basically was hearing all this news about Europe and crisis and the euro, etc. And I think very small position, but went short the euro and went short European equities at that time based on the news, and of course was probably right at the bottom. And so then I found technical analysis, and I was doing very well, just very basic RSI, MACD sort of trading based on those signals.
Right.
Got a little bit overconfident that I think many traders can initially do, and then found that to be unsuccessful because I really didn't have a trading system built around it. I wasn't, I basically was holding on to positions too long, or I didn't really have any sort of methodology or trading system that I was following at that point yet.
Okay.
So I went back to the drawing board once again and discovered Elliott wave theory, and the whole theory behind it is what really made me the most interested. And it just made sense as far as why the market was doing things that it was doing, and it was not focused on fundamental analysis. And after that, then I found Avi Gilbert's site, and really thought that he had taken Elliott wave theory to the next level with his application of Fibonacci Pinball. And to go back to one of the questions you asked earlier, what sets me apart, or Elliott wave trader apart from other Elliott wave practitioners, and I would say that would be Fibonacci Pinball.
What is a Fibonacci Pinball?
So
Fibonacci,
Fibonacci,
like pinball machine?
right. So
Can
Fibonacci.
I buy one for my office?
Sorry?
I'm kidding.
Go ahead.
Yeah,
I grew up with those at the bowling alley playing pinball. But why do you call it pinball? Because of the way the market bounces around like a pinball machine?
Between very specific fibs.
Bumpers, and if you have flippers, you could save the ball before your account goes down the drain. Graveyard saves, we used to call them when I was a kid. So pinball is random, or you guys have found patterns within Elliott for this pinball?
Right, so there's very specific fibs that the vast majority of time impulsive structures will kind of bounce in between. Hence the name pinball, Fibonacci pinball. But basically what you do with Fibonacci pinball is within an impulsive move, and why don't I go ahead and show you an example here if you can still see my screen. Is what you're doing is you're taking the measurement of wave one of the impulse, and I assume you are somewhat familiar with Elliott wave theory, correct?
Yes, I'm in dangerous.
Okay. So you take the measurement of wave one using your Fibonacci extension tool, and then you project that measurement from the bottom of wave two, and that basically gives you the fibs going higher that you use as targets, and that price will bounce between specific fibs as it fills out that impulsive structure. So wave one of the third wave within an impulse, so in this case, this wave one here, will typically target between the 382 and the 618 extension. And if price targets around the 382 extension, then the most common target for wave three of three is the 100% extension. And let me bring these fibs to the forefront here so that you can see them.
I just have a question here, Garrett. I understand the horizontal lines are, different fib measurements from different waves. What are the fan lines that start at the low? Do they project time? Is that what those fans are for?
To an extent, but not quite, I would say, as accurate as Fibonacci price levels. So they're definitely secondary in my analysis, but they do kind of give me a general region or timing, I would say, to place the label. So when I see intersections of the Fibonacci price levels with the fan levels, then
you have confluence, and that gives you some conviction about it, right?
Right.
Okay, cool.
So going back to Fibonacci pinball, and then when you see your wave three of three hit a 1.0 extension, then your wave four of three should hold between the 764 and the 618. And assuming it does so, then your wave five of three should target the 1382 extension. And these might be a little bit faint or small, but if you can see here, that was where the high that we saw last year was made.
Right.
And after hitting the 1382 extension, typically your wave four will come back to the 100, or potentially sometimes as deep as the 764 extension. So that's why you see my primary degree wave four label here back down at the 2166 region.
Okay.
And assuming price holds in that region, then your fifth wave should target the 1764 extension. So going, over.
That'll be it, and you're just ball. I know it's a Nostradamus thing. You have it labeled like at the. We should complete 4 like by the end of the year. Oh no, by the end of beginning of 2020, which is by the end of the year. And then we have wave 5, you know, the final part of this bull market, right? Takes you up to 23 or 24. Interesting. Nice looking roadmap, buddy.
Right, and again, yeah, no problem. The timing I find much more difficult as far as market analysis goes than determining
that's the art
price.
of it. You know, so that, you know, that in fact that brings me to a question. So as an Elliott wave practitioner, you always have a preferred count, and you also have alternate counts.
Right.
So as a trader, or just, you know, as a market analyst, do you know, when do you know that your preferred count is wrong and we're going to an alternate after a swing high or low or a wave high or low is taken out? And then after that happens, do you move and trade to the alternate or wait for the dust to clear for a little while?
Well, that's one of the beauties about Elliott wave theory and about Fibonacci pinball is there are specific invalidation levels where you know that count is wrong because it violated some rule that needs to be obeyed by Elliott wave theory. But there are also levels where probabilities will shift very dramatically, and you know, any trading methodology basically we're trying just to weigh different probabilities of potential outcomes.
Right.
So you can still find specific levels where if price crosses that level, then your probabilities for that trade or for that specific count have been changed dramatically. And that might be when you would shift to the alternative count.
Okay.
Does that necessarily mean that I will reverse my position? I would likely stop out below that specific level, which I would have determined before I even placed the trade. But doesn't necessarily mean that I'm going to jump in on the other side of the market. I would wait until another clear setup basically emerged.
Do you ever, because, you know, I have found sometimes that, you know, not using Elliott, but, you know, failed breakouts, like a market taking out, you know, sometimes what would happen in like after a wave 4 triangle and the final thrust, a lot of people will be calling that a breakout, but there are other examples where a market looks like it's broken out or failed and it's a fake out breakout, and some of the best trades are from formation failures because most people are trading the obvious formation, and then if it fails you have a lot of people leaning the wrong way. Do you notice that in Elliott too?
Again, there are specific levels where probabilities begin to typically shift dramatically, but if it really is the initiation of a new move in the opposite direction, then there should be, you know, plenty of opportunity to jump in without necessarily reversing your position right where that level happens.
What do you teach your people that are part of your community about leverage, Garrett?
That we recommend only doing it within the heart of a third wave. So that would be the wave 3 of 3.
Okay, so that's your money wave. But as far as the leverage for trading, you guys participate in more. Is that the only part of a wave that you guys tell people to trade? What I'm getting at is, I think one of the problems, and maybe you noticed it early in your journey, was you're using too much leverage and you're not letting your trades breathe because of how much leverage you have on, and that reduced leverage lets people sleep at night, and also gives you a chance to give the market, the trade, some tolerance to move around, at least, you know, daily ATRs and currencies, and I don't know what it would be in S&Ps, but have you found that out too, that people use too much leverage and their stops are too tight?
I would say it depends entirely on the trading plan. If you've built a successful trading plan around using only leverage, then I don't think it necessarily can be unsuccessful or any different than somebody who's not using leverage.
Okay.
However, when you do use leverage, the issue is that you're often kind of competing against time, because typically when you have leveraged positions, that's either through options or through 3x
especially
leveraged
options.
ETFs,
Yeah.
where you do have that issue of time or decay that you're kind of competing against. So in that respect, yes, it can be much more difficult.
Okay.
But you know, I've seen people who trade only options and do so very successfully.
Yeah, I have too. That's amazing. Because I used to have an expression: options are like relationships; 90% of them expire worthless.
Right.
All right, so we have your look at S&Ps. I know that you cover miners is also and global markets.
Yeah.
Why don't we go to like global markets? U.S. market, one of the strongest markets out there. You have a different view on Europe and some of the other emerging markets.
Yeah, let me
Okay,
go ahead and take a
DAX.
look at the
Okay,
DAX here.
all right.
So somewhat similar kind of opinion as U.S. markets, but yes, as you said, they've definitely underperformed in comparison to U.S. markets. Both they topped earlier last year, and the case of the DAX, it topped back here at the very beginning of the year and saw a lower high in May. Same bottom here in December, but has basically retraced only 50% of that drop off the highs, whereas in the S&P, you know, we're already above the 764 retrace.
Right. Do you like 764? Why 764 over 786?
Honestly, I use both, and in the vast majority of situations, they're close enough that it's you know, splitting hairs.
Okay.
But they're both valid Fibonacci numbers, and I would say it's just personal preference. I haven't found one to be.
Let me ask you this, and you know, I do these interviews to edify myself as well as the community. When you're talking about third waves, that's a time people can get aggressive. Is it because you're looking for extensions on one, and is 1.618 an outcome that you see quite a bit, or are there other extensions that are more repetitive than 1.618 in your experience?
Right. So within an impulsive structure, the third wave, the vast majority of the time is going to be the strongest and most powerful wave. So it's where gains are made the quickest.
Right.
Respecting the fibs, using Fibonacci Pinball, the most common targets for a third wave based on the size of waves 1 and 2 is the 1382 and the 1618 extension.
Okay. All right. Great answer. Okay. What's the most important thing that you could share with people that are starting off in the business besides signing up with you and Avi?
Paper trade to start with.
Okay.
Until you have established a trading methodology and you you know, have actually practiced it and seen its success, don't put actual money at risk. Paper trade.
Okay.
It's not as fun. It's not as exhilarating, but
yeah. When you paper trade, like, you know, that's what guys from my generation did before there were demo accounts. Then if I was wrong on a paper trade, I'd have a little paper cut on my finger. But I wanted to ask you, you know, a lot of people, in my view, don't take demos seriously. Do you recommend people journal while they're paper trading or demo trading? And what I have found is in currencies that it's really the next step, if you don't take a demo seriously, is to trade a micro lot in FX, because at least you get the feel for having something on the line. 100-point move in euro is not going to be 1,000; it's going to be $10. But at least you have some money on the line, so you get used to something you don't. If you don't have any money on the line, that it's real, and take it. People will take $10 more if they could lose $10 seriously than if it doesn't mean anything in a demo account. Do you agree with that?
Yeah, there is a bit of emotion that comes in when something is actually on the line, as opposed
Yeah.
to just a demo account where you know that you're not actually risking any money. So that's definitely good advice, I would say, to start off smaller, and then as you get more comfortable, risk more.
You want to share your look in gold? We recently peaked at around that 1340 level, sold off about $55. The great call I remember from Avi was being long the miners. I think it was maybe it was 2014 or something. A lot of them went up fivefold, and so this is the gold or the gold. Yeah, this is gold. Okay.
Yeah, this is called.
Okay.
So what I am looking for is a possible bottom that we struck here in 2015 is
Okay.
either all of a completed corrective move off of the 2011 high, or
Yeah.
as my alternative, an A wave of a larger correction. In either case, both counts suggest that we still have further upside, even if this is a B wave within a larger correction, with the blue count here being the bullish count, where a bottom is in place and we're developing a new impulse off of that 2015 low.
Okay.
So shorter time frame, I'm looking for another 5-wave structure impulse off of this 2018 low as wave one of the next move higher, either that C wave or the third wave. And I'm looking for one more high to complete that impulse off of the August 2018 low. So the pullback that we're currently getting from the February high, I'm viewing as a fourth wave. And as long as the support here between 1280 and 1260 holds, setting up a fifth wave higher to complete wave one, longer correction is wave two, and then we break out above the 2016 high.
Okay, so this count though, after a little more of a pullback, which you have either 1280, we already did it, or one more low. If we achieve that one more impulse wave up there, Garrett, everyone's going to be calling that a breakout out of like an ascending triangle or something. So people are going to turn real bullish over that resistance level of 1365. It's interesting because when everyone's really going to say the market's turning good, you have something completing up there and then a pretty good correction. That's going to be an interesting time if it unfolds.
Right, and I'm seeing agreement on other charts such as GDX.
Yeah.
For example, I do not see a completed 5-wave structure off of the September lows here yet. I see only 3 waves.
Right.
So I don't view, if we do hold and see another push higher here, that it is going to be a successful breakout as a third wave. But instead of fifth wave, that could get people fairly bullish and maybe even extend beyond standard fibs. But
yeah,
that
that's interesting. I was taught that the miners should lead the way, not lag. In a true bull market, maybe, and the same with oil shares and the underlying commodity. So the fact that you'll have everything in gear once the miners complete this, looks like you have a wave 4 coming in sometime this spring down there, 21-ish, something like that. Yeah.
Right.
So, yeah.
One more push down here
is they should show leadership instead of acting as a laggard to bullion?
What I've found is that they will definitely outperform on a general basis, but not necessarily always make the turn first.
Okay.
For example, the low that we saw in the miners was
that's
in
the one
January of 2016.
was right there for that. Yeah.
However, the low that we had in gold and silver was
higher.
in November of 2015.
Oh, okay.
So they actually bottomed before the miners.
Okay.
So I wouldn't say it's 100%
right
of the time you're going to see that leadership.
I love when people destroy a theory I have. So I'm going to throw that in the garbage. It'll be deleted from my software, Garrett. So you know what? Great interview, Garrett. And I'm sure after people have seen this live or the video, they're going to want to know how to follow you and where you are. So it'd be a good time to, we know that you're Twitter handle is @Garrett Patten.
Correct.
You know, and at first I thought you used some kind of stage name, and I thought it was Garrett's Patterns. But
I've actually
it's
had
actually
comment about that before.
yeah, it could be a new one for you. So, what's the best way for people to follow your work and stay in touch and learn from you?
Yeah, definitely. You can follow me on Twitter. We also, on our site, ElliottWaveTrader.net, offer a free 15-day trial period for our services with no credit card required. So you're welcome to come check us out there and see if you like what we have to offer.
Thank you so much for you know what, our most valuable currency is time, Garrett. Thank you for spending some of it here with us today. Like it or not, you're now my trading warrior brother. And,
I like it.
And I you know, wish you and everyone who your work touches that pips and dollars rain down on them. And really was a pleasure meeting you. Thank you very much for your time today.
The pleasure was all mine. Thank you very much.
And generous with sharing your outlooks. So again, thank you for planting good seed, and I know you're going to have a great harvest in your career as a trader.
Thank
I can
you.
feel it. All right, buddy. So everyone, that's a wrap for today. Remember, don't just count your pips, count your blessings. Follow Garrett. This guy is very good. And we'll see everyone for Turnaround Tuesday. Enjoy the rest of your session. Adios. And thanks again, Garrett.
Thank you.